Moody's downgraded 15 banks, including the big US and European ones. And it was after the close of trading on Wall Street, but investors knew it was coming and there was a lot of angst ahead of it. So this was the key reason the market dropped more than 2%. On top of that was what's called the Philly Fed Index, which is an index of manufacturing put out by the Philadelphia Federal Reserve. And that fell very sharply. Also, new home sales fell, and there were also much weaker purchasing managers' indexes from China and Europe. So all up, it was a bad news session. In Europe, the bigger markets fell a bit, but Greece and Italy went up. And in Australia, the index fell 1%, with solid falls by resources stocks and banks. Fortescue Metals went against the general trend, though, after the company launched its High Court challenge against the MRRT. Now, this chart puts into context the relationship between the resources sector and the industrials over the past decade or so. And it more or less matches what's happening in the economy. Since mid-2003, the industrial index has fallen 6%, while the resources index is still up 150%. The Australian dollar is down more than a cent today against the US dollar, in line with the big moves on share markets, but it's up against a weaker euro as the European economy is clearly heading south, no matter what the politicians say. And speaking of politics, check out this breakdown of Australian consumer confidence by voting preference. Now, we know that overall consumer confidence is weak, but it's the coalition voters, it turns out, who are dragging it down. Labor voters are pretty happy. I'll be back on Sunday at 10 o'clock with Inside Business. Till then, that's finance.